Moving on, we have Vishwanath who's called in from Bengaluru. How can we help you?
Yeah, yes, ma'am. Good evening. This is Vishwanath from Bangalore.
Good
See,
evening.
I have a flat which was purchased in 1990,
Okay.
which was developed by ourselves only, along with the developer, as a family property, which has got about 6 flats.
Okay.
And if I sell it now, the entire apartment we want to sell it off. So what will be the capital gains which I can claim in this? What is the price and how it is calculated between 1990 and now? It's almost 25 years old building.
Okay.
We had spent about 15 lakh rupees in those days.
15 lakh rupees and there
So
are
now
six
now it
apartments.
may fetch around 4 or 5 crores. So how do I calculate the capital gains in this?
How does he calculate capital gains? And that's that's a very different kind of question. It's not one flat that he's talking about. This is an apartment block, from what I understand, 6 flats in all, which they had built along with the developer for 15 lakh rupees in 1990, worth crores now.
Correct. So it's a very unique thing. The whole building or apartment was constructed comprising of 6 flats. So obviously, had it been a question of one flat, the answer was really simple and straightforward. But now there are 6 flats, so I'm not sure whether who occupies or whether there are different. It's leased out to tenants and it is just owned by Vishwanath. But assuming that so long as Vishwanath owns it and whoever occupies it, if the entire apartment is to be sold out, obviously it will be treated as a commercial transaction because Vishwanath had motive to construct the building and then maybe either sell the flats or give it on lease on tenancy to someone. So this being an adventure in kind of business, this is potentially likely to be regarded as business income as against capital gains. But obviously also it depends whether Vishwanath has classified this apartment as inventory, stock in trade, or whether it is regarded as pure investment. If the apartment is recorded and categorized as investment, then it is more likely to be capital gains in that scenario. But nevertheless, he would have to substantiate that what was the purpose of creating a building and treating it as an investment as against being an inventory. And if he is able to successfully demonstrate that yes, this building was for valid reasons an investment for his personal use essentially and not for commercial use.
So Samir, how does he do that? How does he do that? How does he show that this was an investment and this was not inventory?
Yeah. So I think again the facts are lying in the question that whether he has leased out, what was his intention at the time when he constructed the property, to whom these 6 flats belong to. So all those things need to be answered, and if he is not occupying himself or his family is not occupying but it is someone else, then it could be potentially being seen as a commercial transaction or a business transaction as against investment.
So, but will the tax treatment or the tax outgo over here significantly differ? If it is inventory, if it is seen as inventory and not investment.
Yeah, because a capital gain would be assuming this is long term, so it would be only taxed at 20%. But if it is business income, it would be taxed at 30%. Plus, he will not get any indexation benefit. And also, what will happen is that he will not get the benefit of reinvesting this amount and getting any exemption, which otherwise is possible in capital gains.
So, if Vishwanath say were to go to a tax consultant, and there is a case that can be made for classifying this as investment vis-a-vis inventory, and where he can actually benefit from from the indexation, etc., and claim exemption on long-term capital gains tax.
Yes. So again, the whole genesis is that whether he can distinguish that he is not in the business of property, he is He had no intention to do any business in this property. It was meant for self or for family. Otherwise, there will be no difference between a typical developer and Vishwanath, because if a developer gets taxed as business income, why not Vishwanath? So long as he is able to demonstrate, get adequate documentation done, he should be able to, in that case, treat it as a capital gain, and then he can get benefits. So what he can do in that case, A, he will get indexation, B, he should be able to reinvest this amount and get an exemption on capital gains.
Right. So Vishwanath, like I told you right at the outset, it's a complex question and you've got a complex answer over there. But the simple answer is this. The best thing that you can do right now is go to a tax consultant. There is a way in which, like Samir just told you, you can avail of the tax benefits. You can avail of that deduction that you get on long-term capital gains tax, the exemption, I'm sorry, by reinvesting the capital gains. But for that, the best thing that you can do and what you should ideally be doing is get the services of a tax consultant. Considering that the transaction that you're talking about is in crores of rupees, it does make sense to spend a few thousands on a tax consultant who will show you how to save crores and lakhs in tax at least.
Yeah.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.